All right, it's Tuesday, March 5th. This is a pre-opening SPY report about 45 minutes before the open. You can see here after the shooter bar from yesterday, where we expected lower prices, price on the pre-market range, this is kind of a 1-minute chart, is grinding lower here towards the open. This is the range between the blue lines. You can see here the upper blue line is kind of near the midpoint of the prior day. So until we get above there on a daily basis, I'm not going to get bullish, and we're going to see how much lower, we want to go after the open. I'm kind of, I told you yesterday that after that close, I was kind of anticipating lower prices. So I bought some SPY 520 puts that I'm holding overnight. They closed at 810. What did I buy them? I bought them at 776, right, near the close, as price was, if you go to the 15-minute chart I discussed, I was anticipating a potential failure once we took out the weekly high. And as it started moving down, I decided to buy some puts here pretty aggressively, anticipating the shooter bar and then the potential, pinball effect to the downside that I've been talking about on yesterday's recap and the weekly recap, and how, we'll see what really unfolds. So to me, it's a no-risk scenario now. What could happen here at the open? If we look at price, first of all, we could start up the first cup, 15-minute green bar, let's say. If so, I would want to, let's just see if it takes out this kind of this quasi liquidity right here. Even though the pre-market highs deal with yesterday's range, I can see maybe coming up here and looking for a green to red move to take out whatever, low of the day forms in the pre-market lows. Maybe out of the gates we pause, and then break down. Maybe we, break down right, strongly with a red bar. Again, we're going to see if this 2-down day takes out this target here, and this green, that's the low of the big bar on Friday. If we do that, that is the pinball effect that I was talking about, that gets to the midpoint of the prior week, and that all of a sudden sets up the potential for an outside week to the downside. Although, we do have a big buying tail in here, so we'll see if support comes in at that area. But, if we can get down there, that might set the outside week. And then if we get to that purple line on the monthly chart, all of a sudden we're breaking down towards the midpoint of the prior month, which means you get the higher high of the month. Maybe with plenty of time to go, we can get all the way down to an outside bar and get kind of a monthly kind of a broadening action here on the weekly chart. That would look like kind of higher highs and lower lows kind of into this area. But again, we got to get the 2-down red week, and we're not really, close to that yet. Or actually the 3-bar week, because we took out the high the previous week. So if we get down there, it would be a 3-week kind of broadening action that would then follow through a little bit. On the daily chart, it's more likely that if we come down here, that we take out these lows and kind of work into this gap. So, a lot of potential to the downside here, but it's all going to depend on price action. So I just wanted to point out what to look for. To me, going to see how that opening bar, as always, relates to this pre-market range. Can we break below there and follow through, which will set the tone for the day to the downside? If so, do we start reaching this target? And if something fails, let's say we come down and we start lower and can't hit that target down here, and then get a bar that takes out that first bar high pretty strongly, and intraday structure turns up, maybe that's the beginning of failing to reach this target, and we're holding in this range. And then, maybe in the week, by the end of the week, we head higher. But for now, all signs point to continuation to the downside. We just got to see how it forms. After a gap down, you might get a green to red move. You might get, it just depends on how, as always, how opening price action correlates with the pre-market range. So I just wanted to point that out. I think, I've spelled out enough on the prior videos some of the scenarios going forward, what could happen if we continue lower. So just watch intraday structure along the way. Keep the midpoints of the prior day in mind. Let's say we head down today, and we close red, and keep the midpoint of today in mind going, forward for the rest of the week to see if we can take out that weekly low. You do have targets, into this area if things really want to get weak. So, for now, until things, until the market really wants to prove either intraday structure strongly coming up today, if we stay down here and can't hit this target, or if somehow we come up to the midpoint, above the pre-market high, the midpoint of the day, I'm biased to the downside. So that's the only two ways I could see, getting back comfortable to the buy side in the very short term. And we're just going to have to see how it unfolds to the downside, either like I said, pretty strong with a pinball effect on the various time frames, or something that kind of grinds and can't really start hitting targets, and then I can start maybe in the rest of the week thinking about the upside forming. But for now, moving lower. Opening seems to be, let's go to the 1 minute again, near the bottom of the range, but anything's possible once it starts, so we'll see if that brings in buying right out of the gates. For me, since I bought some puts up in here, it's kind of a no risk scenario just to watch all these things unfold and then go from there. And that's why I kind of aggressively wanted to buy that shooter bar at the end of the day yesterday. So we will see where things go for not only today, but for the rest of the week.